before you scroll, before you switch tabs, before you assume everything is normal, just stop for a moment, because what you are about to hear is not noise, not hype, and not random speculation. This is about a psychological signal that has historically appeared before some of the most volatile periods in modern financial history. Here's what's going on right now. Bitcoin just hit a level on the fear and greed index that has only happened 3 times since 2023 times. The number is 9 out of 100. Do you understand how extreme that is? That's not fear. That's not even extreme fear. That is full-blown, white-knuckle, middle-of-the-night panic. That is people selling their Bitcoin at $66,000 who bought it at $60,000 just to get out with something. That is social media flooded with posts saying Bitcoin is dead, the bull run is over, the dream is done. And you know what happened every single time this index dropped below 10 before? Bitcoin pumped hard. We're talking 150%. 200% in the 12 months that followed every single time. Now hold on, I'm not here to tell you it's guaranteed to happen again. The market doesn't give guarantees. Anyone who tells you otherwise is lying to your face, but I am here to show you something that most people scrolling through their phone right now have. Absolutely no idea is happening. While retail investors are panic selling into the abyss, Abu Dhabi's sovereign wealth fund just crossed $1 billion in Bitcoin ETF exposure, while everyone is screaming BlackRock is dumping Bitcoin. The on-chain data is telling a completely different story. And there's something else, something that's circulating right now that barely anyone is talking about on this platform, a theory about who might actually be pulling strings in this market, and whether it's true or not, the implications are massive. I've been in this market long enough to know the difference between a real crash and a manufactured panic. I've been wrecked, I've seen bull runs, I've watched entire portfolios get wiped in 72 hours and then come back to new all-time highs 6 months later. I know what real capitulation looks like, and I know what it looks like when the smart money is quietly loading the boat while everybody else is throwing theirs. Overboard, what's happening right now? Let's just say I have some thoughts. But before we get into the meat of this, and trust me, this is going to be one of those videos you come back to let me do something I always do. And I do it because I actually respect the people watching this. Before I go any deeper into this, and we are going deep today, I have to be real with you. I am not a financial advisor, not even close. I'm just someone who has spent years in this market, made mistakes that cost me real money, learned from those mistakes, and now shares what I see. Nothing in this video is financial advice. Everything here is for educational and entertainment purposes only. If you're making investment decisions based on a YouTube video, any YouTube video, please stop, do your own research, talk to a licensed professional. Your money is your responsibility and yours alone. We clear? Good, because now I can actually talk to you like an adult. Let's go. Let me take you back for a second, not years back, just a few months. October 2025, Bitcoin hit $126,080. That was the all-time high. That was the moment everyone was talking about $200,000, $500,000. Some people were even throwing out $1 million per Bitcoin. The euphoria was real. The fear and greed index was sitting above 90 deep in extreme greed territory. People were taking out loans. People were putting their retirement savings into crypto at the top. I saw the posts. You probably did too. Regular people on Reddit saying, I just went all in. This is my shot. That's what the top looks like. It always does. And then it started sliding slowly at first. Then faster. Then the headlines started coming. Bitcoin bear market confirmed. Crypto winter 2.0. The bubble has finally burst. You know the drill. You've seen this movie before. Maybe you were in this movie. Today, as of this recording, Bitcoin is sitting around $66,855. That's a 47% drawdown from the all-time high. Now here's what I want you to understand, because this is where people always get confused. A 47% drawdown sounds catastrophic, and look, it feels bad. I get it. If you bought near the top, you're down. That's real pain. I'm not dismissing that, but let me give you some perspective, because this is exactly the kind of context the media will never give you. In the 2021 to 2022 cycle, Bitcoin dropped 77% from its all-time high, 77% from $69,000 all the way down to around $16,000. And you know what? Within 18 months of that low, we were setting new all-time highs. We were at $126,000. We're currently at a 47% drawdown, historically speaking. We're not even in extreme crash territory for Bitcoin. This is painful, yes, unusual. Not even close. And here's what caught my eye when I was going through the data this morning. The Fear and Greed Index. This is a metric that measures market sentiment across multiple factors: social media, surveys, volatility, momentum, and compresses it all into a single number from 0 to 100. 0 means everybody is terrified. 100 means everybody is euphoric. Simple enough. Today's reading, 9. To put that in context, think about what a 9 out of 100 feels like. Imagine you asked 100 people if they feel good about the future and 91 of them said absolutely not. That's the sentiment in Bitcoin right now, and I want you to think about something. When has mass panic ever been? The smart move in a market with a history like Bitcoin's? I'll wait. Let me show you something that should make the hairs on the back of your neck stand up. The fear and greed index has only dropped 2 single digits below 10 3 times since this metric started being widely tracked in 2020, the first time. March 2020, COVID crash. Bitcoin dropped to $4,000. Everyone was convinced it was over. Crypto is dead. The entire financial system is collapsing, and then Bitcoin went from $4,000 to $69,000 over the next 20 months. That's a 1,600% move the second time. November 2022, FTX collapse, Sam Bankman-Fried arrested, contagion spreading through the entire crypto market, Bitcoin sitting at $16,000. Crypto winter is permanent, Bitcoin will never recover, and then what happened? 18 months later, new all-time high at $73,000, then $126,000 in 2025. And now? Fear and greed, 9, 3 readings below 10, 3 times of maximum fear. And every time the 12-month return was over 150%. Now let me be absolutely clear. Past performance is not a guarantee of future results. The market can always do something it's never done before, but you'd have to have a very specific reason to believe this time is different. And when I look at the fundamentals, when I look at what's actually happening on chain and with institutional money, I'm not seeing that reason. What I am seeing is something very interesting. Here's where it gets good. Open up social media right now, and what are you seeing? Headlines screaming BlackRock sold $84 million in Bitcoin. Fidelity dumped $49 million. ETF outflows are massive. People in comment sections saying even institutions are running away from Bitcoin now. And I understand why that narrative is spreading, because if you don't know how ETFs work, and most people don't, it genuinely sounds terrifying. BlackRock is selling. The big boys are leaving. It's over. Except that's not what's happening. Let me explain this simply, because this distinction matters enormously. When a Bitcoin spot ETF like IBIT records an outflow, that doesn't mean BlackRock is selling their Bitcoin. It means investors who hold shares in the ETF are redeeming those shares. They're selling their ETF position. BlackRock, as the fund manager, has to go sell the underlying Bitcoin to give those investors their cash back. It's like a mutual fund. If people are pulling money out of a mutual fund, the fund manager has to sell stocks to cover those redemptions. That doesn't mean the manager thinks those stocks are bad. It means their clients are panicking and want their money back. The fund manager, they're just doing their job. And here's the real question: who is buying that Bitcoin when the ETF has to sell it? That's the question nobody's asking right now, and the answer should make you sit up a little straighter, because while the ETF headlines are dominating the conversation, something else is happening completely off the radar. Abu Dhabi's sovereign wealth fund, one of the most sophisticated institutional investors on the planet, just crossed $1 billion in Bitcoin ETF exposure. $1 billion, that's not a retail investor panic buying the dip. That's a government-backed fund with armies of analysts and decades of experience making a deliberate, structured allocation into Bitcoin at current prices, and it gets better. Goldman Sachs CEO David Solomon recently publicly admitted that he personally owns Bitcoin. Not Goldman, not a client fund, him personally. Now you tell me, does that sound like the behavior of people who think Bitcoin is going to zero? Because if the CEO of one of the most prestigious investment banks in the world is personally holding Bitcoin while retail investors are panic selling at $66,000, someone is wrong about this market. And historically, when retail and institutions diverge this dramatically, the institutions win every single time. Now, if you're the kind of person who wants to be ahead of moves like this, if you want to be the one who sees it coming instead of reacting after it's already happened, then you already know what to do. Just make sure you're here for the next one, because what's developing in this market over the next 30 to 60 days? It could be the most important price action of this entire cycle. Okay, now let me address something that's been spreading across crypto Twitter and the forums like wildfire right now, the Jane Street theory. For anyone who's not familiar, Jane Street is one of the largest quantitative trading firms in the world. They are market makers. They operate in virtually every major financial market. And a theory is currently circulating unverified. I want to be clear about that, alleging that Jane Street and potentially other market-making entities are using the ETF mechanism to suppress Bitcoin's price. Here's the basic idea. When large amounts of Bitcoin ETF shares are created and redeemed rapidly, it creates constant selling. Pressure on the underlying Bitcoin. If a firm is acting as an authorized participant, the entity that actually creates and redeems ETF shares, they could theoretically use that position to profit from volatility while keeping the price suppressed. Again, unverified theory, not confirmed, could be wrong, could be right, but here's why it matters even if it's completely false. The fact that this theory is spreading, the fact that people are asking these questions tells you something crucial about market sentiment. We are at maximum skepticism, maximum distrust. The narratives that spread when sentiment is this low are always dark, conspiratorial, and fear-driven. You know what narratives spread at market tops? This time Bitcoin is going to 1 million. Institutions are all in. Crypto is going mainstream forever. The old financial system is dead. The narratives you hear at market tops are euphoric. The narratives you hear at market bottoms are apocalyptic right now. The narrative is hidden market manipulation by Wall Street firms. I'm not saying the market has bottomed. I genuinely don't know. Nobody does. But when I look at the combination of what I'm seeing, the extreme fear readings, the institutional accumulation, the dark conspiratorial narratives dominating social media, it rhymes very loudly with every other time in Bitcoin's history when it was about to make a significant move higher. Quick pause because I care about the people watching this. I want to be absolutely clear. I am not telling you to buy Bitcoin, sell Bitcoin, or hold Bitcoin. Everything I'm analyzing here is based on publicly available data and my personal interpretation of market patterns. My interpretation could be wrong. Markets are unpredictable. I've been wrong before, costly wrong, and I'll probably be wrong again at some point. Your financial decisions are yours and yours alone. Never invest money you can't afford to lose. In crypto especially, things can move against you fast. I've lived it. I know exactly what that feels like. So please be smart, be careful, and let's continue. Let me pull back the curtain on something that most people watching Bitcoin price action completely miss. The price is the story everyone sees. But the on-chain data, that's the story happening backstage. And right now, backstage is where all the action is, exchange netflow. This is one of my favorite signals. It measures whether Bitcoin is moving on to exchanges, which suggests people are getting ready to sell, or away from exchanges, which suggests people are moving Bitcoin into cold storage. For long-term holding, right now, Bitcoin is net leaving exchanges. Think about what that means. Despite all the panic headlines, despite the fear and greed reading of 9, despite the ETF outflows, despite social media losing its mind, actual Bitcoin is moving away from exchanges and into personal wallets. You don't put Bitcoin in cold storage if you're planning to sell it tomorrow. You put it in cold storage when you're done trading, when you believe in the long-term thesis, and when you don't want anyone exchange hacks, platform failures to be able to touch your stack. Funding rates on the futures market, another critical signal, are sitting near flat to negative right now. Positive funding rates mean traders are paying to be long, which means the market is overheated and a flush is coming. Negative rates mean shorts are paying, which often signals a market where too many people have bet on the downside, and a squeeze can happen quickly. Right now, not overheated, not a bubble. This is a washed out, exhausted market, and exhausted markets have a habit of surprising people. The open interest, the total amount of money in futures contracts, is falling, which tells me this isn't a leveraged pump about to implode. The speculative excess has been cleared out. The people who shouldn't have been in leveraged positions have already been flushed. And there's one more piece of this puzzle I need to share with you. Where are we in the halving cycle? Bitcoin halved in April 2024. That's when the new Bitcoin being mined per day got cut in half. Historically, and I want to emphasize again, historically, not as a guarantee, the most explosive price gains in Bitcoin happen in the 12 to 18 months after a halving, the 2020 halving led to Bitcoin going from under $10,000 to $69,000, the 2016 halving led to Bitcoin going from under $1,000 to nearly $20,000. We are now in February 2026. That's roughly 22 months post-halving. In previous cycles, the peak came around 18 to 24 months after the halving, which means, if history is any guide, we may not actually be in a bear market at all. We may be in the longest consolidation phase before a final cycle leg up. I'm not saying that's what's happening. I'm saying that's what the historical pattern would suggest. And when you combine that cycle data with a fear and greed reading of 9, with institutional accumulation, with Bitcoin leaving exchanges, the picture that starts to form is very, very interesting. You know what's crazy? Every month I make a video breaking down exactly these kinds of signals, the stuff that doesn't make the mainstream headlines but matters enormously to how this market actually moves, the people who watch consistently. They tell me in the comments they feel prepared, not because I predicted anything perfectly, but because they understood the landscape before everyone else did. That's the game. That's what preparation looks like. Let me give you the roadmap, 3 scenarios, real talk, no sugarcoating. Here's what the bull scenario looks like and what would trigger it. We're sitting at $66,855 right now. There's a critical support zone between $60,000 and $68,000 that analysts across the board have identified as a structural floor. Think of it like this: it's the foundation of the building. If it holds, you can keep building upward. If it breaks, we need to talk about the next scenario. For the bull case, Bitcoin holds above $66,000. The ETF outflows slow and reverse. We start seeing a string Of positive inflow days from IBIT and FTC, institutional money, sovereign wealth funds, pension allocators, corporate treasury buyers continues to quietly accumulate. Then one of two catalysts fires. Either the Federal Reserve signals a rate cut, which would be massively bullish for risk assets like Bitcoin, or the Trump administration's Strategic Bitcoin Reserve Initiative gains traction and creates direct government buying pressure on the market. If both happen close together, we could be looking at a move that takes Bitcoin back toward $100,000 and potentially toward what multiple Wall Street analysts are calling a $150,000 target by end of 2026. That's the bull case. Now, this next part might be uncomfortable, but you need to hear it. If Bitcoin breaks below $60, 000 on significant volume, if that floor gives way, the technical picture gets ugly fast. There are analysts currently modeling a scenario where Bitcoin tests the $40,000 to $45,000 range. That would be roughly a 65% drawdown from the all-time high. Not quite 2022 territory, but close. What would trigger this? A macro shock. A Federal Reserve that keeps rates higher for longer than expected, a significant deterioration in the equity markets pulling crypto down with it, or, and this is one to watch, continued ETF outflows that accelerate instead of reversing, creating sustained selling pressure on the underlying Bitcoin. If I were still actively watching levels in real time, and I'm not telling you to trade, but if I were, I'd be watching $60,000 like a hawk. That is the line. Above it, the bull case stays alive. Below it, the game changes. And then there's the scenario nobody's talking about. The market does what hurts the most people. Think about who's positioned right now. Retail is panicked and either already sold or terrified. The fear and greed is at 9. Short positions are building. People are expecting further downside. What if Bitcoin just doesn't give them the crash they're waiting for? What if it grinds sideways, slowly, painfully, for weeks, until all the people who set limit sell orders below the market get frustrated and cancel them, until all the people waiting to buy the dip at $55,000 give up and buy at current prices because they're scared of missing a move, and then it accelerates? I've seen this play out more times than I can count. The move that hurts the most people is the one that punishes both the sellers who jumped ship early and the buyers who waited for a lower price that never came. That's the Bitcoin surprise scenario. And honestly, with sentiment this extreme, it might be the highest probability outcome of all three. You know what I realized making this video? Last month, when I broke down the halving cycle data and why we weren't in a traditional bear market despite what the price was doing, the people who watched that video came into this volatility with context. They weren't caught off guard. They had the framework. That's what I'm trying to give you right now. Not hype, not hopium. A framework for understanding what's actually happening. So when the market moves, you're not reacting emotionally. You're responding intelligently. If that's the kind of content that serves you, well, you know what to do. And one more time, because I mean this genuinely, this is not financial advice. I am not telling you what to do with your money. I'm sharing data, patterns, historical context, and my personal perspective from years of watching this market. But I don't know your life. I don't know if you have kids depending on you. I don't know if you can absorb a loss or if a bad trade would derail everything you've built. So please treat everything I say as a starting point for your own research, not as a conclusion. Talk to a licensed financial advisor before you make any significant moves. I've said it 3 times now because I actually care. We clear? Good, because here's where this gets really powerful. Let me bring this full circle. Remember where we started? That number, 9 out of 100. That's the number that launched this whole conversation. That's the number that historically has marked moments of maximum fear that preceded massive Bitcoin rallies. And that's the number sitting on the screen right now while you're watching this. Here's the final insight I want to leave you with, and I think this is the most important thing I've said in this entire video. The Bitcoin market, and honestly, all markets are not driven primarily by fundamentals in the short term. They're driven by human emotion, fear and greed, panic and euphoria, mass psychology operating at scale. And the people who consistently make money in this market over time are the ones who understand that human emotion is predictable. Even when the price is not, when everybody is euphoric, caution is wisdom. When everybody is terrified, curiosity is courage. Right now, everybody is terrified. The fear reading is 9. The headlines are apocalyptic. Social media is full of people announcing they're finally out of crypto after losing money. This is the moment that historically rewards those who did their research, understood the cycle, and had the conviction to stay calm. I'm not telling you it's going to pump tomorrow. I'm not telling you it's going to pump at all. What I'm telling you is that the data pattern we're looking at right now, extreme fear, institutional accumulation, cycle positioning, on-chain signals, is one that Bitcoin has navigated before, and every time it navigated it before, the people who panicked out regretted it, and the people who stayed anchored to the fundamentals did not. That's not a promise, that's history, and here's the thing I didn't even get to today. There is something developing behind the scenes, something involving the US Strategic Bitcoin Reserve that I think is going to fundamentally change the demand picture for Bitcoin in the next 6 to 12 months. I'm going to break that down in my next video with every piece of available data, every government filing, every public statement, and I think when you see the full picture, it's going to change how you think about Bitcoin's trajectory from here. Trust me, you don't want to miss that one. The market doesn't care about your feelings, but I do. That's why I make these. That's why I go through the data every single week so you don't have to start from scratch every time something moves. Stay sharp, stay informed, and I'll see you in the next one. If this video gave you even one thing you didn't know before, one data point, one perspective shift, one moment where you thought, okay, I understand this a little better now, then do me one favor, not for me, for yourself. Hit that notification bell, because the next time something like this happens in this market, and it will, I want you to be the first to know, not the last, never the last, the people who stay ahead of this market. They don't get lucky, they get prepared, and preparation starts with information. That's all this channel is. Be here for it. All right, here's what I want from you right now. One question, simple, drop your answer in the comments below. Where do you think Bitcoin is going to be on March 31st, 2026? Give me a number, not a range, a number, your honest prediction based on everything you know right now. I read every single comment. I respond to as many as I can in the first hour after upload, and I'm going to pin the most interesting prediction, whether it's bullish, bearish, or somewhere in the middle, because this community has been shockingly accurate in the past, and I think your collective wisdom is worth surfacing. Drop your number. Let's see where the smartest Bitcoin community on YouTube thinks this is going. And one more thing, my next video, it's covering something that literally no major crypto channel is talking about right now. Something that, when it breaks mainstream, and it will, you're going to want to have heard here first. I can't say more than that yet, but make sure you're notified, because that one is going to be important. Stay sharp, stay ahead, and I'll see you in the next one. Peace.